Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show as we continue our series on credit. Specifically now we're talking about how to build credit the right way, and we're in part 3 of that. In the first part we talked about, how to establish credit. In the second part we talked about some different options for credit, some secured cards or some, beginner cards. Today we're going to talk about some of the frequently asked questions about building credit. And I think the chief question that I ask here is, why do I need to build credit? Seems like a pretty simple question, but I don't think a lot of people realize the impact of this. And if you ever hope to buy a home, if you ever hope to get a loan, you're going to need good credit. And in fact, a lot of people don't realize some of the other things that credit are used for. So let's take a few minutes and talk about that. If you want to buy a house, you're going to need good credit. That's sort of a no-brainer. If you're going to buy a car, you're going to need good credit. If you're going to buy a used car, you're going to need good credit. Let's say you go to the furniture store and you just set up your new apartment. Well, you might need some furniture for that. Well, you've got these little signs everywhere, we finance. Guess what they're going to need for that? Credit. Let's say you needed to rent that apartment. Well, a lot of people don't realize is that landlord's going to look and see, okay, what's your credit look like? They're going to pull that credit report. And they're going to look at, what do you have? As a retired lender, you could say, having worked in the industry, they're basically going to be looking to make sure you have at least 4 open trade lines. So 4 accounts. It could maybe a car loan. It may be a personal loan, maybe a credit card loan, maybe something that you're an authorized user on. The thing a lot of people don't realize, though, is your credit history is also used for calculating car insurance premiums. Car insurance companies figured it out a long time ago that those 5 C's of credit also can be used to determine your risk as a person that they're insuring. So if you've got bad credit, guess what? You're going to pay more for your car insurance. So this is another reason that you want to build credit. We talked about this, apartment rental applications. You're not going to look at your credit. If you don't pay your bills, they're going to figure, hey, you're going to move in here and you're not going to pay your apartment bill. And then we're going to have to deal with attorneys and look for eviction and have a big mess to clean up. Another thing they're doing is employment screening, and there's a whole discussion about that. A lot of people get angry about this. Why is it that you get passed over for a job because you failed to pay a few loans back? And there are some states talking about banning this practice. But again, I think it comes back to those 5 C's. What's your character? What's your capacity? I know working in the credit union industry, one of the things we used to do whenever we hired somebody is look at their credit. I didn't want to hire a teller, for example, if I was concerned about their credit because, not to be ignorant, but, if this person's struggling with their credit, what's the likelihood or what's the propensity that this person's going to try to steal from the drawer, So I got to look at their credit and see, are they having issues? One of the things that we'd look at, if we already had somebody working for us and they started to, have issues with their credit, we'd start to look at, what's going on with their life. So that's why it's so important, to really develop build that credit up. So let's talk about the next obvious question is, well, how long does it take to build good credit? The truth is you can build average credit or good credit in about 2 years. But if you really want to build excellent credit, and we'll talk about, how credit scores derive, it takes about 7 years to build a credit score of 750 or higher. And we'll talk about the different types of, credit, which we would call like A paper. That's like your best credit, and then so on and so forth. But opening at least a few accounts of each type, loans and credit cards, and being absolutely meticulous about making timely payments. That's the key to this. And the problem is, the shorter your credit history, the more a single late payment will set you back. If you've just started and you've got a car loan and a credit card and you miss a payment, that's going to hurt. And it's going to affect your credit score dramatically because you've got such a small horizon, you've got such a small amount of things on it. It's going to be glaring to a lender looking at this and say, hey, Ralph, how come, I see you've got this car loan, but man, in the last year, you've been late on 5 payments. You're not a good credit risk. And most consumers with credit scores in the top 10% or that 800 or better have at least 10 years of credit history. And that's because the length of your credit accounts is part of that scoring model. So the longer you have accounts open and in good standing, the more creditworthy you appear to be. So even if you don't need credit today, if you want to get the best rate on a mortgage in 10 years, you've got to start to build your credit now. So I talked about those 4 open lines. They're looking to make sure that you've got, a credit history. They don't want to just see, hey, this person's applying for a loan and the only thing they've ever had was a JCPenney's or Macy's credit card. You're going to have a struggle there. Well, then I get the question of, well, how do I build credit fast? The way you can do that, and then I'm not going to say fast, but we'll say more quickly, is you start with one account, then gradually adding new credit cards or other accounts every 6 months. Now, you need to be careful because one of the other things that they look at as part of the credit score is a thing called inquiries. And basically, an inquiry is nothing more than when a lender takes a look and pulls your credit report. And inquiries will impact your credit score because if I'm the lender and I pull your credit report and I see you've got a ton of inquiries, what that tells me is you're out looking for credit. And what I'm worried about is, let's say that, you've got a ton of inquiries and you've applied, at this bank and that bank and every other bank. Well, I don't know whether you got those loans from those banks or not. So you could be up to no good or not even realize you're up to no good, but building that credit up, and you may have 10 credit cards now, each with a $5,000 limit. Well, by themselves, that $5,000 credit limit doesn't seem bad, but when I add 10 of them together, now all of a sudden you've got a $50,000 unsecured line of credit. So if I'm a lender and I'm number 11 in that mix and I'm looking at your credit inquiries and say, wait a second, you've applied at 10 different places. And this is one of the things you got to be careful about too. And this kind of aggravates me. When you go out car shopping, be sure that you don't go sit with the finance man or don't give your social security number until you've already decided this is the car I'm going to buy. Because what will happen is these car dealers are going to pull your credit. And what they don't tell you is they may not only be pulling your credit, but they're going to shoot it out to their lenders. And each of their lenders are going to pull your credit as well. So be careful in that regard. Now, they tell me with the credit scoring models, if you do this in one day or over a couple of days, they don't ding you for that. But the truth is, I don't believe that because they're going to look at, how many inquiries have you had. So to build it quickly, you need to gradually add new credit cards. When I say quickly, this is about a 2-year deal here. But you need to make sure that you're paying them timely. You need to make sure you're doing the right thing as you go, which brings us to this whole discussion of credit bureaus. And there's 3 credit bureaus, and we're going to talk about that in our next session, but there's Equifax, Experian, and TransUnion. So when you join us for our next session, we're going to talk about, what things report, what things don't report, and what makes you get a better credit score versus a bad credit score. And while I'm here, remember, you should be looking at your credit report because you want to make sure that you intercept any identity theft or anything like that right away. And there's a ton of sites where you can pull your credit. I think it's annualcreditreport.com. You're entitled to a free credit report once a year. Or if a lender turns you down for a loan, you're entitled to a credit report. So if you ever go out to apply for a loan and, you get turned down, you have the right then to get a copy of that credit report, and you need to work it. You need to take that credit report, tear it apart, look at it and say, okay, what is this? What is this? Because it's not always accurate. So I hope you've enjoyed this session. We're going to talk more about credit bureaus in our next session. So make sure you join us on the Ask Ralph shows. We deal with credit.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.